The Morgans Equity Strategy team is pleased to have published two pieces overnight which we think are useful for explaining the current tricky market environment. Shortly I'll cross to my colleague Andrew Tang in Sydney, who'll step through a couple of market shaping events that may unfold in May-June. We're talking about the federal election, the May budget, and some of the reasons why we think those risks potentially are overblown in the current marketplace. I'd briefly firstly like to talk about market themes though. Portfolio positioning in such an abnormal macroeconomic environment is a tricky exercise. However, the piece we've published this morning really steps through market themes and stocks leveraged to those themes, where we prove to investors that you can still generate solid returns despite the tricky market backdrop. Think about themes like inbound tourism, the health and wellness revolution, innovation through the use of emerging technology. These are all themes that are delivering strong returns in the right stocks leveraged to them. The piece published overnight looks at a dozen of these ideas and probably 24 ways to leverage them. I'll now pass over to Andrew.
Thanks, Tom. Just want to cover off a few points from our note published overnight. We looked at the implications of a Brexit or possible Brexit, as well as the federal budget. Just firstly on Brexit, market's pricing in a fair bit of uncertainty. We think that the market is overpricing that risk and it's overstated. We think the likelihood of a Brexit is getting less and less likely going into the referendum on the 23rd of June. What we think, the polls are pointing to 50-50, but if you look at the online bookmakers, it has it only at about a 34% chance. When it comes down to it, what we think is the voters, when they're asked to pull the trigger on possibly exiting out of the EU, that they're more likely to follow the status quo and vote for an in vote rather than an out vote. It's better the devil you know. Our economist Michael Knox covers off a few points on Brexit, so I encourage you to have a look at his note published the 4th of April and some of the stocks that we like going into the vote as we get a bit more clarity around whether or not the UK will stay or go is BT. The stock has been sold down quite heavily, having 60% of its revenues denominated in the UK. The stock was upgraded from a hold to an add by our analysts last week. Solid fund flow update last week, strong flows from the retail side of the business, good underlying momentum. So we think BT is a candidate to trade this. So bottom line is UK, second largest economy in the EU. We think that it's got the political and economic clout to negotiate a deal that it wants. So please have a look at that. Secondly, on the federal budget, the Treasurer Scott Morrison has made it clear that it's about fiscal restraint as to rather than additional tax measures or revenue measures, i.e. increasing taxes. We think that super and healthcare will be on the table. Healthcare's already been on the table with the mid-year economic review, mid-year budget. So we think that again, the pathology providers as well as the diagnostics imaging providers will be under the spotlight in regards to bulk billing. Also super, it was reported in Fairfax Media, the government's looking at tinkering with that. So again, we think that super is one way the government has to lose the least amount of political capital by targeting some measures there and tinkering around the edges. But keep in mind, it is an election year, so we're not expecting an overhaul of policy here. We're also expecting the outcome of David Murray's inquiry, either at or just slightly before the budget. We think there might be some positive regulatory changes for annuity-style businesses such as Challenger. So we'd like to get ahead of that and like that stock ahead of the budget. Please have a look at your inbox and check out the note. Thank you very much.